Assalamu alaikum dear students. So today our question is 3.5, page number 59 on your book. Let's start the question. Mr. Smith Incorporations submit the following data on October 31st, 2019. Materials put into process 4,300. Direct labor is paid at the rate of $7.80 and 8.40 per hour in Department A and B respectively. Now here, just like in the previous question, two departments. One is Department A and one is Department B. So in the Department A, the direct labor per hour rate is $7.80, and in Department B, the direct labor per hour rate is 8.40. It means that if in the Department A, direct labor work for 1 hour, so they will be paid with the rate of $7.80. And if in the Department B, direct labor work, so they will be paid $8.40 per hour. Department A work for 6,125 hours, and Department B reported 9,875 hours. Look at, in the Department A, number of hours are 6,125, and in Department B, number of hours is 9,875. Factory overhead is applied on the basis of direct labor hours. Look at, when we calculate the factory overhead cost, so the factory overhead cost will be calculated on direct labor hours with the rate of $5 per hours in Department A and 4.20 per hour in Department B. So for the factory overhead, the per hour rate is $5, and it means that in 1 hour in Department A, factory overhead cost will be $5, and in Department B, factory overhead cost will be $4.20. Inventories on October 1st and on October 31st. Finished goods inventory on October 1st are 11,300. and on October 31st, 9,400. Work in process on October 1st is 17,300, and on October 31st, 19,425. Materials on October 1st, $15,000, and on October 31st, $19,200. It shows that from October 1st to October 31st, that this is the 1 month total data. What are the requirements? Without preparing a formal income statement, determine total manufacturing cost, cost of goods manufactured, and cost of goods sold. We should find out manufacturing cost, cost of goods manufactured or finished goods, and cost of goods sold. But without the format, we will not follow the format. So now let's start the solution of this question. When we not use the format, so look it, we will use the T accounts. Through by T accounts, we will prepare our T ledger, prepare to find out the manufacturing cost, cost of goods manufactured, and cost of goods sold. Why these statements are prepared from the general and from the ledgers. So first we have the material account, material ledger, then we have the work in process ledger, and then the finished goods T ledger. So first we will prepare now the materials ledger. So now look it, we will solve this question through by T ledgers. So first one, I will make the material ledger, then the work in process ledger, and then will be of the finished goods ledger. Because in the manufacturing process we have mainly three major accounts, T accounts, material accounts, then material are put into process, some process taken place on it, and after the work in process, when work in process is finished, so they are converted to finished goods. This is the additional work which we will do for the solution of this question. So first one is the material cost, and okay. So material accounts we will first start. This is the month of October. We will check out that either we have some remaining material from the previous month, September month, or not. So here in the question, if you looked out, the 15,000 material we record on 1st of October. It means that these 15,000 material, this is the material of the month of September remaining. So we will record here these material as an opening material for the month of October. So opening material or beginning material, yani means on 1st of October. 1st October, and the amount of this is $15,000. So I record it on the debit side of the just a minute. Debit side. How much? 15,000 material. which comes from the previous month. During the month, we will add the material purchase. Why? If we looked out, so beginning material in a remaining material from the previous month is $15,000 and the ending material is 19,200 materials. So it means that during the month of October, the company makes some purchases. So we add those purchases with the beginning material. So add purchases how many? In the question are given material purchase are not given. So we should find out now that how much purchases we made, because purchases are not given directly. So we will use our common sense. Why? Because beginning material is of 15,000, ending material is of 19,200. So it means that we made some purchases which is unknown still. We will find out. Okay. In the question are given material put into process. Material put into process means that material are issued from store to process. So when we issued the materials, so general entry is that material account will be credit and work in process will be debit. Okay, when we purchase material, so material account is debited, cash or payables account is credited. Now when materials comes to the store, now from store we issued the material, requisition of materials for the process. It means that now materials transfer from store to work in process. So work in process increase, that's why work in process will be debit. And from materials account, material is decrease. Why? We issued the materials. So on credit side, we will write the requisition of material. How much material put into process? Put to process. The $42,300, $42,300 material we put into the process according to the question. Okay, today is 31st of October and 31st of October shows that the 19,200 materials is not used in the process. These material will be used in the upcoming month. So what we will do, from this current month we will subtract it, we will minus it, these materials. Why? These material will be used in the upcoming month. So from this month we will minus the amount of those material. Minus means on the credit side we will write. So ending materials. Ending material means on October 31st. Amount on October 31st is how much? That is 19,200. So look it, if we looked here, the $42,300 materials, that is we put into the process, and the 19,200 are left. So now how much total materials we have? So total materials we have now, we will sum it. We will add 42,000 plus 19,200. That is equals to 61,500. How much? The 61,500. That is credit side. So our debit side will also be equals to 61,500 total. But look it, if our debit side is not equals to 61,500, on debit side we only have 15,000 and purchases are miss. So how much will be our purchases? Look at, our purchases will be the 61,500, this. If we minus 15,000, so we can find out the purchases, which is equals to how much? 46,500 purchases we find. Simply, if you looked out, the 15,000 materials left from the previous month, the 46,500 we made the purchases. So how much is total? 61,500. Clear now? And in this 61,500 we put into the process. We issued the material of the 42,300. So the remaining 19,200 is our ending. Look at, when we put material into process. Clear? When we put a material into process. So here in the material are we record on the credit side. But in the work in process, these material, the 42,300 materials, they are comes to the debit side. Why? Because work in process are increased, and when work in process is increased, so we pass the entry requisition of materials that what work in process debits to material account is credit. So in work in process account from process, so from process now the how much materials comes? The 42,300 materials that are comes. Look it, from here, from the materials, these material issued from here and these are comes here. So in material accounts we record these material into credit side, and in the work in process we record this on the debit side. But look it, we will check out that either we have some work in process from the previous month or not. So yes, we have. So opening work in process, yeah, beginning work in process, opening work in process. Means on October 1st. We have, yes, we have. Look it, 17,300. This is our opening work in process. Means this is the work in process remain from the previous month. So the 17,300 work in process is remain from the previous month, and the 42,300 we put into the process. On this we add in the work in process. So we have direct labor cost, DLC. But look at direct labor. For the direct labor cost, we now two department have. One is department A and another one is department B. So first we will write the department A direct labor cost, then we will write the department B cost, direct labor cost. But look at direct labor cost here is, if we looked out the question, so in the question says that direct labor is paid at the rate 7.8 and 8.4 per hour in department A and B. So look at now, we will write the two departments. Department A, this is additional calculation, and this is department B. So direct labor cost in department A per hour rate is 7.80, $7.80 per hour, and in department B per hour rate is $8.40. Clear? Okay. Now this is for the direct labor cost. Calculation. Number of hours in department A and B is also given, which is in department A 6,125 hours and in department B 9,875. So 6,000, how much? 6,125. Just a minute. And department B, that is 9,875. 9,875. Number of hours are given, per hour rate is given. So now we can find out easily the cost of the direct labor cost. How the direct labor cost will be equals to, formula is, look at, per hour rate multiplied by number of hours. So simple now. Direct labor cost of department A, that is equals to 7.80 multiplied by how many hours work taken place in the department A? 6125. So if I put these value in the formula, that 7.80 multiplied by 6125, so is equals to, this is the direct labor cost of department A. Clear?